What's important to understand about insurance is that this industry is no stranger to climate-related risks. In fact, it's been top of mind for our business for decades, as we've seen loss costs for natural catastrophe-related insurance claims risen more than 660% since the 80s. So suffice to say, climate risk has been built into our normal way of serving customers, as well as our state-based regulatory regimes for a long time.
How we are anticipating what the world is going to look like, not just now, but 20 to 30 years from now, given the lifespan or the life cycle of our built infrastructure. I think that's a key part of resilience as well. And so there are long-standing programs that are spread across a number of departments and agencies where we have an opportunity, I think, to bring at least the federal community together to look at some of those hazard mitigation and hazard and recovery programs and think about how do we modernize them, just like we're modernizing infrastructure.
Just wondering if you could speak a bit to the role of FEMA within this overall strategy that Caitlin shared with us.
We do have a new program called the Building Resilient Infrastructure Communities Program, BRIC, that was established after the Disaster Reform Act in 2018. That takes ahead of a disaster. It takes up to 6% of the disaster relief fund and allows it for mitigation. I think that's a great example of whole of government and where organizations like III can really help in that we will have more money in advance of disasters to think about how to lower the impacts of disasters.